If you're looking for highly educational market analysis, then you are in the right place. This is the Transparent Effects Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. So without wasting any more time, let's jump straight onto the charts. In today's video, I want to speak about EURUSD. Now, why do I want to speak about EURUSD? Because at the moment, we do have quite interesting price action and structure. So what I will be doing is, as usual, providing a complete multi-time frame top-down analysis, starting from the higher time frames, then going down on the lower ones. We will also check what we have when it comes to the commitment of traders. So the COT data, which is what the non-commercials, so the biggest speculators in the market are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on this pair. Now, starting from the monthly, we can see how the market has just created this candle here. Now, when you see a candle like this with a very long wick and a red body, what you usually expect is for the next candle to fill in the wick. Now, why is that? Because if you have a candle like this, it means that on the lower time frames, for example, on the weekly, you will have an impulse and a correction, in which the correction is exactly the wick that we see here on the monthly time frame. So after that, what you usually get is the continuation to the downside, and that is a natural movement of the market, a series of lower lows and lower highs for the creation of a downtrend. So here on the monthly, we can expect more continuation. We drop that on the weekly, and what do we see? Now here on the weekly time frame, we can see how at the moment we are actually testing a quite strong level of previous weekly support, which is now turned resistance here. We can also notice how after an impulse, if you want to measure the correction, we have to take the Fibonacci from the high to the low of the impulse. And if we do that, we can see how the market has just retraced exactly to the zone, which is in between the 0.32 and 50% of the Fibonacci taken on this weekly impulse, which is a quite strong level of supply and resistance that we do expect this market to reject to the downside. Dropping down on the daily, what do we see? Now here on the daily time frame, first of all, we can see how the market had created this W formation. Now, in general, after the creation of a W, what we want to see is the market to create a move to the downside to go and complete the pattern at the previous resistance turn support. So here on the daily, we did expect this move to the downside for the market to complete the pattern at this previous resistance turn support. Now, in general, if we were only to look at the daily, from here you would expect a potential rejection higher. However, we already know from the monthly and weekly that everything is lining up for more continuation to the downside. And if we look left, we can also notice how this area was actually already resistance here and again here. Then this move to the upside was a fake breakout of this resistance, because instead of respecting it as support after the market broke the resistance to the upside, the market failed to respect it as previous resistance turn support and broke back below the level. So in a situation like this, what we could wait for is for the market to create a little bit more continuation to the downside to reach the previous low and break all support levels. And at that point, what we would have is, if the market will provide a correction, we will definitely have the potential continuation to the downside for the creation of this regular head and shoulders. So what we need here in order to get an interesting setup is for the market to create a little bit more continuation to the downside, break below this resistance, and then provide a correction. That would give us a very interesting zone, inside of which we could be looking for a potential setup. Now, if we go and see what we have when it comes to the COT data, and we check the data for the euro, what we can see is that lately net positions have been dropping. In fact, we went from having 64.9k net positions all the way down to having 18.7k net positions, with 40.6k longs closed with the last report. So shorts are getting increased from 154k to 183k, and longs are getting decreased from 242k to 202k. So we're seeing from an institutional side shorts added and longs closed, which lines up with also what we have here from a technical perspective. Therefore, if the market will actually create this continuation and then provide a correction, instead of here how we could be looking for this potential shorting opportunity. Now, as usual, we will have to be reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to a bearish market and provide to us one of our valid entries, at that point, we could be looking for this potential short with a good risk to reward and good probabilities at that point for the potential continuation lower. Now, if you have no idea of what I'm speaking about when I say valid entries and shifting from a bullish environment to a bearish environment, that is all part of the mentorship program, which you can now access completely for free. The link is in the description, so I really suggest that you go and check it out. Also, if you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I'll see you in my next video.